Hi traders, welcome to this video on the euro dollar and pound dollar. We're going to take a look what to expect from the charts in September 2022. Let's start first of all with the euro dollar. So price action is fighting against this parity level 100. It broke a little bit below that, reached about 0.99. So about 20 years ago, I think last time that the dollar was stronger than the euro. And it finally has happened after those few decades. As you can see here, we're going all the way back here to the beginning of 2000s. So how far can it go? We see a pretty strong impulse here. We can put a fib from this bottom to this top. And then we see that we're quite close to the 78.6 fib, around that 0.99. So I do think that this is a level that will be used. It is that 100 level, I think, is still has a factor as well, although prices technically was below it. I think that the strength of a one parity level 1000 just it goes beyond that exact level. So I would still consider that a factor, even with the 78.6 fib together, to say that's pretty strong support zone. And I think we might see some retracement to the upside using these levels as a support and bounce back up. Now, that said, obviously the trend is heavily bearish. We see from a monthly perspective, month after month, new lows, new lower lows, mostly lower highs, mostly strong bearish candles, just a couple of bullish candles that are typically small and indecisive. Impulse is certainly here to the downside. Obviously, trend is massively to the downside here, falling quite quickly for the euro dollar point of view, for the euro dollar average movement that we've seen in the last few years, at least, from about 123 as the high all the way down to 99. So that's about 2,400 pips here, ultimately, in about 1.5 years. So I think that momentum is not going to be finished right away. And if we zoom into the weekly chart, I think we are looking at a wave 1, 2, and this is all part of a wave 3. But I do think that wave 3 could finally be finished. We put the fib on the wave 1, from the top to the bottom of wave 1. And we can see there was wave 2 didn't break the top of wave 1, hit the 88.6 fib, and has reached all the way down to the 261.8 target, at also around parity. So typically when price goes that far, it is a wave 3. Anything beyond the 161.8 is a wave 3 usually, or should be a wave 3. Even if it breaks through minus 100 already, to be honest. But that's already certainly a clue that it's going to become a wave 3 if it breaks below that. So yeah, even the minus 61.8, every time it breaks one of these targets, of course, it's an extra kind of hint that we're looking at wave 3, specifically the minus 100. So yeah, very far wave 3, but now I do think that we might get a retracement in wave 4. After wave 3, you get a wave 4. Wave 3 is an impulse. Wave 4 should be a choppy correction. Let's get rid of this monthly fib and back to the weekly. So if this is a wave 3, we should see a retracement for wave 4. So something like this, wave 1, 2, 3, 4, 5. So a wave 4 is typically shallow, choppy, lengthy, slow, and therefore we should expect price to go up like this to the 23.6 fib, maybe make a correction, then move up again, maybe to the 38, and then move down again. Wave 4 could stop at the 23.6 fib. Usually it's the 38. It could be either. Sometimes even the 50 fib. Although in this context, I don't expect that to happen. And if it breaks above the 50, it's typically not a wave 4. The invalidation of a wave 4 would certainly happen if it breaks above the bottom of wave 1 at the 78. And then, of course, the wave 4 is invalidated. But a break above the 50 would be already a big warning that this is not looking bearish anymore. In fact, the break above the 38.2 is already a big question mark. But anything below the 38 is bearish territory, confirms the downtrend, and I expect one of these two fibs to hold price action. So I think there's space for potential counter trend trades up to these fibs, specifically the first fib. Then it depends a little bit on the patterns that play out if there is still more space to the 38.2 fib. This week will tell something about, in a couple of hours, how this weekly candle closes. So far, it is a bullish candle, but once again, this candle is not finished yet. And of course, it's important to wait for a close candle because anything can still happen in this particular open candle. But if it does close bullish, and if it closes preferably near the high, of course, that would show some more strength. But any type of bullish candle that is not a doji and finishes above parity, and the higher the better, near the high of that candle, could indicate a first sign of reversal or retracement, I should say. Looking at the daily chart, we had 1, 2, 3, 4, 5, 6, 7, 8th day not breaking this bottom. It looks like a triple bottom with a lot of wicks at the bottom. They're around that level, so I think that if it breaks above these tops here, around 10050 and 101, let's say 10075, that there could be then a breakout up to 10250, and then maybe retracement, and then a move up to 101, 10450 / 105 round level. 4-hour chart doesn't show much, but this retracement correction stuff, of course, if it breaks through this support zone, triple bottom, then everything is different than I imagined. Then we might be going down for another lower low at 0975, for instance, maybe even 095. And there could be a downtrend continuation. And of course, if there is a breakout, I would be looking for a break, pull back on the lower time frame, and continuation. But I would definitely need to see a break. Otherwise, I would not be trading it to the downside myself at this particular level. I would not be looking to trade that. And only if it breaks, flag on the lower time frame and continuation lower might be considered. Otherwise, there's divergence between these bottoms that would support the retracement perspective as well. Pound USD is back at the double bottom we had from 2016 and 2020, which happened, of course, 2016 after months of a downtrend after the Brexit referendum, and then the COVID outbreak at the start of that. And yeah, it looks like an ABC correction here to me, like this. And we're in a downtrend. Here we're in a downtrend. Here we're in a downtrend. So we've had down, correction, and we're again in a down. So I don't know how far this down could go, but you know, there is probably space for some fall to maybe 112.50, 110. And all these round psychological levels could be the next targets. I don't dare to say how far it could go, but we could put a fib on this. And we reached the minus 272 target. Minus 68 target seems a bit far-fetched at this moment, to be honest. But maybe parity could be a level to think about as the ultimate target. I don't know. We could be considered. We can put a fib from here to here as well. If this was an ABC within a wave 4, we can see 102.50 as a minus 272 target. So that could be something as well to think about. But let's take a look at the weekly chart. Bearish remains bearish, and this could easily be a wave 1, 2, 3. Let's put the fib on the wave 1. So far, very close to the minus 61.8 target. Of course, that level, the minus 61.8 target plus the previous bottom at 114, 115 could be a bouncing spot for retracement, but I do expect a continuation of that downtrend. We could put the fib on this. I'm not sure. I forgot here. No, that's not a wave 1, 2 because it got broken. So if we do get the retracement though here, let's say it goes down to 114, then we could expect a retracement to 23.6 fib, and then a continuation lower again towards, for instance, 107.50, which is the minus 272 target, maybe the 161.8 target even at parity. 4-hour chart, daily chart. No signs of any potential retracement as yet. If we look at this piece down here, wave 1, 2 like that, and then start to look at this wave 3 from here onwards. And we can see wave 1, 2, wave 1, 2, 3, 4, 5, 4, 5. It might be, close to finishing this wave 5 of 3. Anywhere around 114, 115, there's probably not that much space left until it does really face a strong support. But once again, considering the momentum and the overall technical picture, I just expect a mild bullish retracement and then a downtrend continuation below 115 towards 112.50, 110, 107.50, 105, 102.50, maybe even as low as parity. But these are far-fetched targets. These are really, really far targets, and I don't know if price will necessarily go that far. That remains to be seen, of course. For the moment, 115, 114 seems to be a very strong level when considering the history here and the fact that price was bouncing at these zones, plus minus. The exact levels will depend probably a little bit on the broker charts, and it could differ from chart to chart, broker to broker, trader to trader here, if I remember correctly. But in any case, it's clear that these kind of levels are quite low, quite far. Some kind of retracement at these support levels might be happening. But considering the momentum, I don't think that retracement will go that deep, maybe back to 117.50, 120. And then I think there will be a retest of these 150 zones and probably a break eventually. All right, that's it. Thanks for joining. See you very soon. Cheers. Bye-bye.